Meanwhile, a perfect storm hit Wall Street yesterday as fears of the coronavirus collided with a plunge in oil prices. The Dow sank more than 2,000 points, losing nearly 7.8%, its worst day since the 2008 financial crisis. The S&P lost 7.6% and the Nasdaq almost 7.3%. The sell-off was so bad that a circuit breaker was triggered minutes after the opening bell, which halted trading for 15 minutes. The plunge in oil prices comes as Saudi Arabia and Russia battle over market share. The demand for oil has declined because fewer people are traveling due to the coronavirus. This morning, global markets are now trying to bounce. Dow futures are pointing to a more than 800-point surge after the president floated the possibility of a payroll tax cut.
So, Steve Ratner, you have charts, but before we get to your charts, let's talk a little bit about what happened yesterday. I don't usually watch CNBC only because, I mean, it's a great network, but I usually don't watch it because, of course, as you know, Willie and I believe in off-track betting. Is Steve Ratner there?
Yes,
there you go. Okay. I was just wondering
right
if
there.
I was actually talking to a wall here. Okay. So, yeah, we do a lot of off-track betting. So Willie and I don't listen to CNBC. It's COTB. But you have to have a certain cable provider to have that one. But I was listening, obviously, and watching CNBC all day yesterday. And it seemed, sort of the oil wars between Russia and the Saudis caused a lot of the unrest. By the end of the day, when they were trying to figure out how long this route would go, people were moving back to the coronavirus and talking about the fact that there's just so much uncertainty, that the markets don't know what's going to happen. They don't know what the bottom's going to be. They have a supply problem. They have a demand problem. They don't know what consumers are going to be doing. I mean, there were so many questions, and they've sort of priced this oil war into it. Now it seems all the analysts are worried about the coronavirus and trying to figure out where the bottom's going to be. Nobody thinks there's going to be a deep recession that lasts for a year and a half, but they think it could be a pretty severe recession, could happen quickly and be more U-shaped. What from the analysts you spoke with yesterday on the street and in your business, what caused yesterday? Was it that perfect storm Mika was talking about? And if there is a recession, how long do they think it'll last?
Well, of course, the stock market is just another version of OTB, but we try to do it with a few more numbers. We'll probably get to about the same probability of success in predicting it. Look, I think yesterday was a perfect storm of things that came together, and they were all related, of course. It started with the coronavirus, which led, as Mika said, to a drop in oil demand, which led to a fight within OPEC between the Russians and the Saudis, and effectively a collapse of OPEC, so that everybody's now pumping as much oil as they can, which led to oil prices collapsing. And then you also have the fact that the market hates uncertainty. The market is not used to public health crises. It doesn't really fancy itself as an expert on public health. And then you have the fact that, frankly, there was an absence of leadership from Washington for a good while. And markets hate that. They want leadership. They want the president to stand up and say something. The president spent the weekend playing golf and spent Monday at a fundraiser in Orlando. But if we can take a look at the charts if you want, and I'll show you kind of what happened. So as Mika said, you had this enormous sell-off yesterday, but that brought the total sell-off since the beginning of this event back in February. It brought the total sell-off in the S&P to 19%. And that's 1% short of what we call a bear market. 20% is considered a bear market. What's also interesting about this sell-off is if you compare it to what happened in 2007 when the market began to sell off in anticipation of the financial crisis, and you can see the small gray dotted line up here. The sell-off in this case has actually been steeper than it was in 2007. It has been a record drop in terms of the amount of drop over the period of time it occurred. Now, also not surprisingly, it's been concentrated in a few industries that have been most affected by all this, and that includes banks. Banks get hurt when interest rates go down because they can't make as much money on their loans. It includes airlines, not surprisingly, because people don't fly as much. And it includes energy, which has been absolutely decimated by this. And so if you look at a few of the stocks, for example, United Airlines is down by 40% since its peak. Citigroup is down by 34%. Occidental Petroleum, just to pick some of the leaders, is down by a pretty stunning 71%. So let's turn then to what this means for economic growth. So already economists are slashing their forecast for economic growth. This happens to be Citigroup's forecast, but you can use anybody you want. And so you can see that back here for the second quarter, Citigroup was projecting. Was projecting a much stronger quarter, and now only 1%. And then in the third quarter, Citigroup was projecting over 3%, and it's now projecting 0. Fourth quarter also cut its projections, and so on. And so you can see that for the year as a whole, Citigroup is now projecting 1% growth this year, compared to 2.4% growth that it was projecting just a few months ago. And for
so Steve, can I interrupt you here? We look at these projections, but these really, and I certainly respect the economists who are trying to figure out what's going to happen, but we have no idea what this epidemic or what this pandemic's going to be. If it's like Italy, then, of course, those numbers will likely be far worse. If it lasts 6 months, the numbers will be far worse. We're still sort of whistling in the dark, aren't we? Because we don't know the extent of this coronavirus. We've all heard this is not the deadly virus that, this ultimate virus that everybody has feared, because the survival rate is still fairly high. It's far, far worse than the flu, but it's not what the deadliest of pandemics that a lot of people have feared is. But if it gets out of control, then we could be shut down like Italy for 6 months. Then those numbers will be far worse, won't they?
Sure, and we can take a look. It's all probabilities, Joe. Nobody knows for certain. We're just guessing on probabilities. And if you want to look at some...
And of course, if we get on top of it, I'm sorry to interrupt, I just want to finish that sentence. If we get on top of it, actually... it may not be that bad. I mean, the future really is in the hands of our leaders on how quickly and how nimbly they respond to this crisis.
It is, but the yin and the yang of that, of course, is that a more aggressive response, shutting down more of the country, as Italy is doing, would have a bigger short-term economic effect. Italy is going to go into recession. That is a virtual certainty, simply they're already on the verge of it anyway, the cessation of economic activity. What Trump's been trying to do is have it both ways, in a way. He's been trying to have business as usual because he doesn't want the country to go into recession, but he's also now having to recognize the reality. So let's talk about probabilities and take a look at what the prediction markets think is going to happen. And there are other ways to measure this with treasury yields and things like that, but this is pretty simple. But if you simply go back before all this started, you can see the market was pricing in a relatively low 20-ish% probability of a recession this year. And now you can see what's happened in just the last few days, where the probability has shot up to 64% of a recession this year. And again, it's a probability. We don't know. But I would also say, since there are obviously political implications of this, just if there's a recession this year, it doesn't necessarily mean there's going to be a recession before Election Day. It doesn't necessarily mean it is going to bring down the Trump presidency. But there is this I think a very distinct possibility of a recession, certainly a slowdown. And right now, I would say the odds are slightly better than 50% of a recession.
Thanks for checking out MSNBC on YouTube, and make sure you subscribe to stay up to date on the day's biggest stories. And you can click on any of the videos around us to watch more from Morning Joe and MSNBC. Thanks so much for watching.